Welcome, everyone. Before I exit my screen here, I'm Marilyn LeBourveau with the Kentucky Cabinet for Economic Development and KY Innovation. And Kristine McNiel is the other project manager. And we're going to be giving this presentation today on the Kentucky Small Business Tax Credit Program. KY Innovation is in the Kentucky Cabinet for Economic Development. A little bit of housekeeping. I'm going to cover the first two slides just as an introduction and welcome. This is being recorded, so it will be available for you to view again at a later date or share. And there, once I exit, I'm going to monitor the chat and be answering questions or getting questions together for our Q&A area. Kristine's going to cover the PowerPoint presentation. So next slide, please, Kristine. So just to tell you a little bit about KY Innovation, we are in the, as I said, in the Cabinet for Economic Development. Any of you not familiar with the Cabinet, we are located in Frankfort. We're part of the state government, and within the state government, we're the primary agency responsible for encouraging job creation and retention and new investment in the state. So the Cabinet for Economic Development is the jobs and investment folks. So we don't create the jobs and investment, you do as the business owners. Our mission is to make sure that you have all the information, resources, programs, connections, and introductions that you need to get your business, is to start it, to grow it, diversify it, move it, whatever it is that you need. We want to make sure that you have that so that you can grow and flourish in the state of Kentucky. And within the cabinet, there are approximately 70 people. I haven't counted recently that work out of the Frankfurt office, but we do cover all 120 counties. The cabinet has many, many programs for international trade and small business, innovation, research, etc. So, but we're just focusing on the cabinet, on the small business tax credit program today, which is one that we've had for many years. And Kristine and I review all these applications as we come in. So we're really excited to share this with you and to get your follow-up questions today and later on. So I will turn it over to Kristine now. Thank you.
Okay, thanks, Marilyn. Everyone said I'm Kristine McNiel in the Cabinet for Economic Development, KY Innovation. So we're here, we have a lot of small businesses attending today, this webinar, a lot of service providers. So this is our typical small business tax credit, a little bit more of a deep dive rather than just an awareness presentation. This is a little bit more of a training workshop. We'll get a little bit more into if you're a small business filling out this application, how do you apply, what do you need? So we'll get a little into it as we go farther. But everybody attending today works with small businesses, owns a small business, and we all know that they're really the backbone of our economy and they employ over half of our private workforce. We're gonna focus on the small business tax credit, one of our incentive programs that really is available to all industries and small businesses. So we will get into how this works and what you need. All right, this is a little bit about the program over the past since its inception. So one of the nice things about this slide is that it does show an average per application. And that is kind of nice. A lot of companies ask us that about, really what they're looking at. What is it, worth? What are we eligible for? So that's just an average. That doesn't mean that's what you're going to get. That is just an average based on the application submitted. So you can see those stats. Program has been around for almost a decade now. So the small business tax credit is a tax credit, right? This isn't a cashback program. So it's a state income tax incentive for the small businesses that are applying. And it's a tax credit for creating jobs and investing back in the company. So there's a lot of headlines with big industries that do this and incentives the state has. The state has these incentives for the little guys. So that's what this program is. And it is a state income tax credit. It can range from $3,500 up to $25,000 per calendar year. And that is job driven. And we'll get into how that works coming up. All right, it is a $3 million allotment per our fiscal year in our state budget. So every year we have $3 million worth of tax credit to award in this program to our small businesses. We do share that pot of money with the Selling Farmer tax credit now. So that is a bit new. And it does have a 5-year carry forward for unused tax credit. So this is great for startup companies. They may not have a tax liability in the first few years. You can carry that forward, or if you don't use your entire tax credit in 1 year, you do have that carry forward option. And these applications are approved every month with our KEDFA board here at the cabinet. I mention this because we do approve, Marilyn said we review these all year round. They do get approved monthly. Coming up on, in the November, December one, they kind of roll those into one because of the holidays at the end of those months. So if you're looking for a 2020 tax credit, we're really coming to the end of the year. So there's a little bit of urgency to get those submitted as soon as possible if that's part of your tax strategy for the 2020 year. Otherwise, we'll roll over 2021, still eligible, still review those. It'll just be a 2021 tax credit. All right, so a couple of things that are unique about this program. It is available to all industries. So retail, service, ag, a lot of times those industries feel a little left out. Not in this program, everybody wins. So you have to be an employer with 50 or less employees. And you have to create at least one full-time position and invest at least $5,000 in qualifying equipment or technology. So the other unique thing about this program is that it's a look-back program. So you're really getting an incentive for something you've already done. So you've created this position, and those positions have to be filled for 12 consecutive months. There's a grace period if the employee changes, but those new positions have to be filled for 12 months. And then that investment in the equipment or technology can be anytime in the last 24 months. So we do a 24-month look back window. So if you're going to apply today, we're looking back to October of 2018. And then we're looking for those new positions, full-time positions that were created, and they've been filled for 12 months until about October 2019, roughly. So we're looking at that window for the employees. Those are the ones that would be eligible now to put on an application and apply. And then any of your qualifying investment that's happened in that past 24 months. All right, so you do need to submit those applications within that 24-month window, right? We can't go back and approve things from 2017 or any kind of dates that are outside that 24-month look back period. So it's a little bit of strategy. We do encourage small businesses, when you do create new full-time positions, maybe make a calendar reminder or something 12 months out from now, from that time period, to remind yourself that you may be eligible, and go ahead and fill these out. All right, so eligible positions, like I said, they are full-time. They are Kentucky jobs, right? We're incentivizing Kentucky positions. They must have an average of 35 hours per week and be consecutive for those 12 months that we discussed. These are W-2 paid employees. So 1099, any contract employees are not eligible. All right, they have to have an average salary of $10.88 or more per hour. That is based on 150% of the minimum wage. So if minimum wage changes, that number will also change. But right now, that's what the average we're looking at on that W-2 for those 12 months. And it must increase your base employment of your business. And I'll get into that definition here a little bit later. We are incentivizing and creating new positions, right? And moving forward. All right, other employee requirements. Basically everything but benefits included. So if you are working on, commissions, if you have, wait staff tips, those things are all included, just not benefits. I already talked about the 40-day look back grace period. If your position changes employee people, right? We're incentivizing positions, not the people. So that's fine too. Here's a look at the application. So like I said, this workshop, this training is a little bit more in depth for our small businesses that are looking to fill out the application. It's not intimidating. It's very simple. It's about 3 pages of company information. This is where we kind of realize that it's job driven. So the number of full-time employees, and we highlight this in this presentation because a lot of times this is a common error. This is one of those, best practices pain points that is worth talking through a little bit. So we are looking to incentivize base employment. This example that's on the screen, this company has 5 full-time employees when they go to submit their application. So they put in the employees they've hired, and then the base employment is calculated. The application will ask you how many employees you had the day before the new employee that you put on the application was hired. And in this case, the company's answered 3. So they have 5 now. They had 3 24 months ago. They put their new positions on the application, and the application lets them know that they're eligible to claim 2 new positions. So that's one of those spots we want to make sure you guys are filling it out correctly the first time around. Right, investments. So you got to do both, right? Jobs and investments, not one or the other. You got to do both. So on the investment side, we're talking about qualifying equipment or technology. And it pretty much is any tangible property, assets of the building assets the company is investing in. They have to have a useful life of more than a year. So monthly, quarterly subscriptions do not qualify. Anything that's not, you got to renew, that's not going to have a lifespan of more than a year will not fit. These have to be purchased within the last 24 months, as we discussed. So, and they don't have to be related to your position that's on the application. So if you're purchasing a vehicle and hiring a new driver, the driver doesn't have to drive that vehicle. We're just looking for investments into the small business. They have to be, equipment is a little bit more of a gray area. Technology is a little bit more of a gray area. It used to be, you can, go to the shelf and buy your software off, a physical piece of software. So those a lot of times are a gray area. We mentioned this because that is another point that a lot of companies kind of struggle with when they're filling these out. So annual subscriptions work. All right. If you're doing software subscriptions that are more than a year lifespan, those are going to qualify. And a lot of the times it just depends. We can't say until we see what you've got. But those will qualify. But again, if you're doing monthly software invoicing, then that's not going to qualify. So the idea is that these are assets that if you're going to pick up your small business and you're going to move it down the street, you would take all this stuff with you. So real estate, leasehold improvements aren't going to be applicable either. So soft costs also aren't allowed. So we're looking at the unit price of the equipment that's purchased, right? So any kind of labor installation, any kind of discount, shipping, that kind of stuff, all those soft costs have to be taken out, tax has to be taken out of that. So you come up with your total investment. So like I said, real property, leasehold improvements usually aren't going to qualify for this program. We're looking at investments in equipment and in technology that the small business is using. But it can include, computers. It can include office furniture if you're buying reception furniture for your waiting room. Those kind of things will work. Vehicles work. They do have to be titled in the name of the small business, though. So, but vehicles are another great asset that applies for this. All right. So, kind of moving into documentation, like I said, roughly 3 pages, right, and some certification pages. So when you go to fill out this application and you submit it, you're certifying, that everything you put on there is true. We don't ask for payroll documentation at the time of the application. We always can come back and ask for more information as needed. And then the Department of Revenue can always come back and ask for more as well. You do have to include your invoices and proof of payment on the investment side. So we usually those come, fronts and backs of canceled checks, statements from vendors that the invoice is paid in full. A lot of times people are buying stuff online, so you have electronic receipts, emails that show that, that credit card charge that it has been paid. So those are all sufficient as well. This is the front of the application, just company information. All right, so the timing of when to apply is kind of a question we get a lot from small businesses. So you're eligible to apply. When you're going to actually apply is, like I said, in that 24-month look back period. But we're really looking at those employees that you're going to put on this application. Once they've met that 12-month requirement, then that's the area, that you're going to apply. So it almost gives you another 12 months to submit your application. That time period is when I encourage small business to make that calendar reminder to get your documentation together, get those invoices, get those proofs of payments, make sure you have all your information together and ready to submit. The equipment investment can be at any time in that 20-month period, though. So if you have hired somebody in October, November of 2018, and you are purchasing equipment now, that's fine if you're going to submit in the next month or two. All right, you can submit as many times as you're eligible. So you can submit more than one application during a year, right? You go up to the max $25,000 in tax credit for that calendar year. Once you reach that max in tax credit, then you have to wait till the next calendar year to apply again. That $25,000 is based on jobs. That would be 8 jobs on these applications. Right. A lot of companies will submit once a year, capture everybody at once. You can put more than one position on an application. So you can do it as you're eligible, or you can do it as once a year and capture a bunch. Usually companies are a little bit heavy on invoices on the investment side and not so much on the employee side. So they might try to capture as many employees as they can. Some companies hire a lot more employees and don't have as much investment. So they kind of time that based on what works for your business. Right. This is the equipment page of the application. So you put in all your employees. We saw that page. Put in all your equipment on this page. You're gonna get your invoices and your proof of payment together. And then the Excel file application, it's available online. Use the Excel file. It does the math for you, and you'll calculate your tax credit because you'll see what it is. So the tax credit is calculated based on doing both jobs and your investments, right? You gotta do both. And this is where we see where it's really job driven. So your tax credit will be calculated by the lesser of what's available, your tax credit potential for between jobs and dollar for dollar on your investment. So in an example, if you have one job, it's worth a $3,500 tax credit per position, right? So if you have one job, that's going to be your tax credit, $3,500 for that position, as long as you have the minimum $5,000 in investment. That's the minimum. That's what it's going to be. If you have $3,500 is less than $5,000, so it'll calculate your tax credit for you. It doesn't matter how much investment you have. If you only have one job, it's going to be a $3,500 tax credit. Even if you submit $10,000 worth of investment, that $3,500 is still less, so that'll be your tax credit. So one job, $3,500 income tax credit. If you have two jobs, you get a $7,000 income tax credit potential. As long as you do the 5,000 minimum investment, that 5,000 now is less than the 7,000. It's a lot of math in the morning, so I apologize. But the 5,000 is less, so that will be your tax credit. Can I see how that works? It balances out the lesser of the two. So if you're gonna have, we usually encourage small businesses, whatever your potential tax credit is for your jobs, because this is a job-driven incentive. So if you have two positions on your application, you have 7,000 in tax credit potential, then you wanna have at least that much in investment to maximize your potential on that application. I said that the application does the math for you. We're happy to answer questions, and that max is where if you have 8 jobs, it'll max out on that application or for the calendar year, that $25,000 tax credit. And again, it does have that 5-year carry forward. All right, so that's pretty much it in a nutshell. It is online. This application is available all the time. We do encourage you to download the most current application every time you apply. As any kind of regulations change, the application will reflect that. So you want to make sure you're using the most up-to-date one. So there's 2 websites, 2 ways to get to it. In the guidelines, fact sheets, other information is also listed. We are happy to answer any questions via email or phone. Marilyn and I will answer any questions you have. All right, there's our contact information. You can also contact us through the email that is on the tax credit application. But the rest of this time we have allotted is for questions, so we'll be happy to answer those now.
Thank you, Kristine. This is Marilyn. We don't have any questions in the chat box. We've got a shy group this morning.
Oh no.
So I don't know if there's anything. We do have several people from within the cabinet and our other partners across the state. So I don't know if anybody has questions or comments or anything else they want to talk about. Or if there's anything else. We got a good job from Ellie Puckett. Thank you, Ellie.
We are recording this presentation, so we'll make that link available and the slides available to our registrants today as well.
Oh, here we are. Just to verify, employees must be there 12 months. Do you want to address that, Kristine?
Yeah, so yes, employees, those new positions, like I said, we're incentivizing new positions. So positions need to be there for 12 months. They need to be full for 12 months. There is that grace period if your employee changes. They do need to be there for 12 months before you apply. So if you're going to apply today, we're looking at, those positions that were hired October of 2018. They've been there for 12 months, 2019, or I guess we could go 2019 to 2020. They have to be there for those 12 months before they're eligible.
Yeah, and this is Marilyn, just, so it isn't like all your employees have to be there 12 months, just the ones that you're putting on your application to be for the tax credit. Um, okay, yeah, here we have a question. What if someone's been there 12 months and COVID happened and we did a layoff for a couple months? Do you want to address that, Kristine?
Yeah, so we're looking at your base employment increase, and some of this depends if you've applied in the past or not. There are some exceptions that I do not have the authority to make, but we can discuss those on a case-by-case instance on furloughing employees and where the company is now for the COVID issue. But we're really looking at, these are jobs that you theoretically would have made before COVID. And if you've, it's all due on that base employment and the base employment increase. So just depending on how that timing is, it may or may not affect where your company is sitting today.
Yeah, we always encourage people to ask the question so that we can, because we've been reviewing these since 2011, and every month there's something that we've never come across before. So please don't, be shy. And you send in an application, we're going to do our best to help you get across the finish line to get that approved. So, we'll get other information, documentation, whatever, to see if we can work with you to get that worked out. And I know, like this year with COVID, this is Marilyn again. If you had a job that you added, in a year or more ago, and maybe you added employees this year because of COVID, maybe you're doing more virtually. I have had several companies that are doing that because they're actually expanding their business operation because people have gone so much virtual. Those are still full-time employees. Those employees don't, the ones you added this year that you're not claiming a tax credit on don't have to be with you for 12 months. Just want to clarify that. Just have to show that you have a net increase. And then, next year when they're still with you, you could apply again and get another tax credit based on those new jobs. And Kristine and I, we typically, pre-COVID, we travel the state and give these presentations month in and month out. And I always like to tell people about the tax credit with a 5-year carry forward. And again, if you're expanding, if you're adding employees and investment, very often, even COVID aside, you might not have a tax liability for a couple of years until your revenue catches up with your expansion expenses. So, say you get say you have 2 eligible positions, you get a $7,000 tax credit awarded. You don't need that until maybe you're filing your taxes at the beginning of 2023. And say in 2023, you've got a $3,000 tax liability. Well, you can go ahead and apply $3,000 of that $7,000 to that tax liability, not have to write that check for $3,000 and still have that extra $4,000 for the remaining remaining 5 years. And this does pass through too. I think we didn't mention that. So the tax credit's awarded to the business, but if you're a sub-S corporation or a limited liability company, this can pass through. And you work with revenue and your accountant on how you want to do that.